Okay, hello everybody. Welcome to the Supercharge Dialogue. This is episode 2. And today we are going to have with us two wonderful people who are going to share with us a bit more about, how to do parenting with your children and how we can look into really about growing wealth for our children and how, they should start off their financial literacy journey. So before we begin, we do many of these Supercharge series myself and Timothy alike, and we will be sharing more about this, about all different kinds of, lifestyles, life things, just to understand a bit more about how we should, grow ourselves better as human beings as time goes. So do check out for more of that. And if you are live here with us, please do go into the comments, type questions. If you have any questions, ask us as many questions as possible during the whole session. We'll definitely try our best to answer some of them, right? And ask our wonderful guests here with us all these questions as well. So just to introduce ourselves, the host first. So my name is Leon, and I am an investing strategist, and I am in charge of really helping my clients learn more about how to do investments and also build their portfolio for their future, right? And to reduce their retirement age, by 5 to about 7 years more. Yeah. And I have with us also Timothy, who is also my host, and I'll get him to share a bit more. Timothy, please.
Yeah. Thanks, John. Welcome, everyone, for this second episode of the Supercharge Dialogues. We're really excited to begin and to have this conversation about, financial literacy for children, which I feel that's really important, especially as parents. I myself am a parent. I have 2 kids. I've been in the insurance industry for a while, right? I left to run my own business, and I've come back with a purpose. I've come back to make sure that the friends around me are all well taken care of, right? And it's part of the mission and the purpose that I have right now, moving back into the insurance industry. Why don't we kickstart with Eugene introducing himself? Right? Eugene and May, thank you so much for being here. Eugene, if you could unmute yourself and share with us, what you do.
What do I do? That's a very good question. It says here on our title that I'm an abundance life coach. So I want to bring abundance to my friends, to my family, and especially I want to be a role model to my kids so that they can also spread abundance in their lifetime.
That's awesome, Eugene. Yeah. Together with us is also my friend and colleague, May. May, could you introduce yourself to the audience?
Hi everyone, I'm May. I'm actually a risk manager, your personal risk manager. I help people to highlight the risk and help them to mitigate them. I'm a mother of 2. Very privileged to be here. Thanks.
Okay, yeah, thank you, May, for sharing about yourself as well. So today we will really go through a lot in depth as to, being parents themselves, right, in their own right, for Eugene and even for May. And even if Timothy has some, tips and tricks as well, we'll be sharing a bit more about, how children should really kickstart their financial literacy journey, right? Because we understand that, children in their lifetime, I mean, for myself, when I grew up, I didn't really know much about how it is to be financial literate, right? I know a lot about math, I know a lot about science, went through the path, but, when we get to come out and, be human beings, right, for ourselves and really explore the world as adults, then what's next? When we want to buy our, properties, when we want to get our first insurance, all these kind of things need money, and at the same time, you need the knowledge as well. So I think Eugene and May themselves, they have kickstarted their own children's journey, in a very crucial manner, and also created a very good foundation for them. So we'll definitely want to get to understand a bit more how they do it, and how us as the audience in this area can also learn about such things. So feel free to ask your questions in the comments. We'll pick them up as we go along, and we'll get Eugene, May, and even Tim, to share more a bit about this. So to kickstart this whole session, it'll be about an hour. So I first want to ask Eugene. So Eugene, are you ready for the first question? Okay, like some kind of
ready.
Okay. Okay, yeah. So Eugene, right? For your children, you have 3 kids. They are 3 wonderful kids, right? So I think the first question that we really want to ask is, for these children, right? How do you teach them to manage money? like when they start, maybe as young as 4 years old, 5 years old. What is exactly your philosophy in that? Like when you want them to learn about money management and things like that. Yeah.
I think the
Why
first
not?
step is awareness that there is such a thing as money. A lot of kids, they think that things just drop in their house. Yeah.
Yeah.
I mean, I made many mistakes with the first one. Yeah, because I was a new father and no one gave me an instruction manual. I don't know who misplaced it. So I had to try and error with my first one. And I remember there was once I experimented with asking him to go and buy McDonald's by himself. So like pass him. So we didn't give him allowance because so young, right? Yeah, but if he wants to get Happy Meal, most parents buy it and then put it on the table for the child. Yeah, but I experimented with passing the money to him and making sure the money is more than enough. Yeah, if not, he thought money is always give and there's no change. Yeah, so pass to him, and he walk to the counter, then must order. There's a lot of mistakes for sure. Yeah, but then if you do it a few more times, they feel a sense of ownership, and it also gets into a habit that the burger doesn't just appear. You have to actually pass something, and that something got changed, come back, then the change need to pass back to Papa. Yeah, so that was step one.
That was step one. So yeah, essentially, I mean, okay, taking from my own experience, I remember last time, when I have the first amount of money, I also went to like buy McDonald's and things like that. But usually tapao some, fishball mee or something for the parents. But always when I buy, then I'll give the money, and then whatever change I get back, I don't really count back then. I think maybe some kids do that. And then when we go back to our parents, then they ask, how much change? Then you'll be like, question mark. Then you pay ma, that kind of whole situation. So how, like for your child, for example, for your son and for your two daughters after that, how do you help them, really ease into that situation? Because I mean, it's actually a big decision. It may not seem like a big decision to us, to go down there, pay money. I know my siblings are like that because they all very scared one. Like, need to buy food. Then they like don't know how. So how do you guys ease them into that? Yeah, is there a manner? Or?
I think the step one is being encouraging. Yeah, that means anything they do is correct because if we keep honing them, everything do is wrong, like come 20 cents missing, then it gives them a sense of fear about money. A lot of people have negative feeling towards money. Although money is just a tool, right? Yeah, we all know that money is just a tool like a car or a hammer. Yeah, but somehow money is a very unique tool. So many people feel negative towards money. I think because since young they saw their parents quarrel about money, or rather over lack of money, and then they see their children their siblings being scolded about money. So it's like money seems to be some evil thing that is causing the family to break up. Yeah, so I think we give it a positive feeling. It's like, hey, high five, buddy. Think things like that. They say, wow, that was awesome. Just only 20 cents missing.
Only 20 cents missing.
So next time, possibly they feel better. Yeah.
I think it's quite interesting. Right? So I mean, with my own experience with my kids is that it's sometimes it's not that they don't know that the money can be used to buy something. They don't know, like, I mean, if you give them $5, they don't know what the value of $5 is. Right? They just know that you can use it to buy something. So it's quite interesting in terms of, firstly, that piece of paper has money. That there's known as money has a certain value to it.
Yeah.
And then the other thing, it's also about learning where this money came from. Which is, it didn't drop from the sky. It didn't drop from a tree. I didn't grow money plants at home to get money. It doesn't work that way. Right? So that's usually the next step. I'm gonna ask May. So in your experience in raising your kids, what kind of conversations did you have? What kind of philosophy do you use in terms of financial literacy with your children?
I think for one, I always tell the children, never spend more than what you have. And I remembered that, when the children were younger and they wanted some items, some toys or whatever. So I would encourage them to save up for what they want. At the one time, on the one hand, to believe that he got for, for that the toy that they wanted, but at the same time also to put aside their pocket money just to save up. Yeah.
Do you have a conversation with them? Because my kids like to do this, right?
Mm.
Chinese New Year, when they get the ang pao, then they all keep their ang pao money, and it's like mine. I can use it to buy all sorts of things. Do you have this conversation with them that, that yes, you have all this money, but you need to be responsible as to how you spend the money?
I did. I mean, because different children have different, attitude towards money. Like my eldest son, Joel, being 5 years older, even though he was 5 years older, but then he's very haphazard with money. So when I give him a stack of ang pao, then he'll just chuck it and then it'll be somewhere in the house. Whereas the younger one, being 5 years his junior, he'll put the money into his piggy bank. So it's just their personality. So I had to go to the extent to tell them that, hey, these are to be put into your saving banks. Yeah. And then when we give you a daily allowance, then from there you can actually spend it on the things that you want.
Oh, very interesting. Yeah. So it's about planning and anticipating. We always use the term, what's it? The delayed satisfaction, deferred satisfaction. What's it called?
Gratification.
Gratification, delayed gratification. See, I'm getting old. I can't remember all these terms, man.
Yeah.
And I realized this commercial break a bit, right? So we've actually done something this round different from the last round, and we actually have prizes. And I forgot to mention it in the beginning. So if you stay to the end, we're going to have a quiz, and each person that answers the fastest and correctly for the 3 quiz questions will get a $10 Grab voucher each. Right? So pay attention to what we're talking about. We're going to ask a little bit of questions at the end. And if you can get it correct and you stay to the end, you're going to get a $10 voucher each. Right? So now we're all at home. We're all stuck, work from home still. And, $10 can buy your bubble tea, your lunch, and whatever you feel like. Or you can teach your children to use the $10 to buy something for you.
Father's Day gift.
Father's Day gift, yeah.
Oh, yes.
Sunday is Father's Day, right? So you can always have a Father's Day gift from your children, right? Okay, so back to what we're talking about. Jan, you had a question.
Oh no, I wanted to say $10. Wow, Father's Day can buy what? I was wondering.
Bubble
Cake.
It's a thought.
Oh yeah, bubble tea. Yeah.
It's a
That's
thought.
true. That's true.
Yeah.
Yeah. Actually, I have a question for me. When you were talking about daily allowance, right? So, I guess for kids, I heard many different school of thought.
Okay.
Sometimes they are looking into. I mean, for my parents themselves, they started me out with daily allowance, but as time goes by, we have a monthly allowance kind of thing. So, for yourself, like for your kids, will you do that as well, or what's your philosophy in that sense? Like, or why choose daily allowance? Why not weekly? Why not monthly? Things like that. Yeah, and I think Eugene can answer this as well later on. Yeah. Yeah. Okay.
I think for us, our family, we have always been practicing daily allowance, but we only started giving them when they go to school. Yeah. So I know of families who actually reward the children if they do household chores, then they give them little, small monetary treats. Yeah, but we don't do that. I think it's only this year when my eldest son turned 18, then my husband gave him the control of his savings accounts, because all the time we've actually had joint accounts. So the children have joint accounts with their daddy. Yeah. So this time around, we gave them, we gave Joel that debit card, and he can actually, whatever he likes, he can just swipe the card. But I was very cautious. I mean, I was just telling him, you sure maybe you should actually have 2 accounts. Yeah, one savings account you don't touch at all, and the other one is for your daily needs and wants.
But I always feel that as a parent, right? you teach them well. You teach them well. You teach them your values. You teach them the philosophies, and at some point in time, you have to let them go.
Yeah.
So they need to learn how. I mean, they need to learn how to handle it, and you hope that they have learned all the things that you've taught them in terms of how to manage their money. But I mean, making mistakes is part and parcel of life. I mean, we've made plenty of mistakes in our own lives,
Yes.
and we've learned
And
from them. So they have to make their own mistakes as well, right? Hopefully, they don't wipe out the entire account while they're making the mistakes, lah. So have some control over it, have some overview of it. But I mean, at some point in time, you've got to sort of let them go, lah. I feel, and hope that you've taught them well enough in terms of how to manage the money and responsibility, and allocating your money the right way. What about Eugene? What have you done with your children in terms of teaching them how to manage their money?
Okay. Just to answer the previous question first, which is weekly, monthly, or daily, or something, right? Yeah. So I think there is no perfect answer. So the answer is not must give monthly or must give weekly. The answer is very similar to my previous answer, which is must give them a feeling of success. Yeah, because if
Feeling of success.
Yeah, well, because if imagine I happen to know a friend, and I think a lot of us also happen to know this guy, whose parents are very successful financial consultants, and they made him do all sorts of funny things like send budget sheet, all the usual best practice thing to do. And today, at the age of 20 something, he has a phobia of Excel sheet. Yeah, so that's something I'm trying to avoid for my children, because it's very easy to swing to the other extreme, where most of us don't manage money well, and then now this one manage money too well until the children have phobia. It's like, oh, I give you monthly allowance, and then like 2 weeks later, like don't have. Who asked you? You're gonna go hungry for the next 2 weeks. I need to call counselor. Yeah, to give them maybe 3 days first, see whether they manage well, right? And then give them 7 days, like slowly like flying kite lah. Nobody take the kite like, hey, how come you fly? And then start to blame the kite. So we need to like release, tighten, release. Yeah. So that's my answer for that. And then the other story, other than McDonald's story I have is Toys R Us. Yeah, I mean nowadays Toys R Us closing down already. Yeah, but last time Toys R Us closing down. Sorry. Toys R Us in US closed down. Singapore still there. Yeah,
that's the Times Square one.
My son used to ask, I want this, I want that, right? Then I'm sure all of us have seen children who throw tantrum. Like, I don't care, I want, right? So I'm thinking like, okay, just pass, let's say a $10 bill to your son and say like, hey, Joel, you can buy anything you like, right? Yes, $10. Then they feel so powerful, right? But actually, they look around, very few things.
Nothing for $10.
Very few things are below $10.
Actually, I did something similar to that. So when my son has like birthday parties, right, to attend, and then what I'll do is I say, okay, let's set a budget, right? Let's set $30 or $40, right? And I want you to go and find a present for your friend in Toys R Us. So he will take his budget, and then he'll go around, and then he'll take a few things, and then he'll start looking at it, and like, I don't know to get this one or this one, and then he'll look at it for 20 minutes, and then he'll turn to me, Daddy, I don't know which one to get. I said, I don't know which one your friend like, right? But he actually goes through the process of thinking,
yes,
which one will be more worth the money, which one his friends will like more, and he looks to work within a budget.
Yes.
Right? Which I feel that it's part and parcel of getting them to understand that these cost money. You set parameters as to how you want to spend your money, and you need to follow them, right? So that was my way of teaching him that money doesn't. I mean, you cannot go for the biggest toy that costs $200, and that's not the way it works. We set a budget, you work within the budget, and you can find something within the budget.
Yeah. I think the concept of budget is very, very powerful. Up to now, a lot of adults still don't know how to budget. Yeah, so if children know how to budget $10, then next time when they have $100, the mindset should still be there that they should spend within $100, and then 1,000 spend within 1,000. Yeah, so this starts young.
Exactly, exactly. So it's learning how to think that way, right? That you have to work within. I mean, now it's allowance or savings. Next time it's salary. And you've heard of many cases of people who start work and then get into credit card debt because they start spending and spending and spending and have no idea how much they spend. I had friends who had thousands of dollars of debt because they just kept spending on their card, maxed out their card, and don't know how to pay.
Yes.
Right? So it's a philosophy that I feel that you need to understand, that the money is there for you to use, but you still need to use it wisely, and you need to use it within a certain constraint.
Yeah.
Right? And that's how you manage your money, because it's very easy, especially in the world of credit. It's very easy to exceed that.
Yeah. Yeah.
It's very, very easy, and people end up living in debt all constantly because they cannot manage money and they have no constraints in terms of their, I want this, I want this, I want it now. I cannot wait. And we are already very instant kind of lifestyle, Got instant noodles and everything also instant one. You want drink, got vending machine. Now you want sandwich, also got vending machine. Everything also vending machine, Chili crab also now vending machine. It's crazy.
Yeah.
Yeah.
And we are living in that kind of lifestyle where everything is fast and everything is quick, and people cannot wait. And so, as parents, I think we need to sort of teach our children not to be like that. Right? They need to be able to understand what's, even you have money, what's important, what's not important. What's a priority, what's not a priority, what can wait. What you need to get now, and I teach my children always to ask. Is you want something? Yes, but do you really need it now? Having the money doesn't mean you need to spend the money. You can always wait and buy something else later on if you don't need it. Right? It's not going to run away, right? So it's philosophies like that I feel that our children really need. They really need to learn some of these things, because if not, they're going to go out there and they're going to get influenced by everything that's around them, and they're going to act a certain way. And that's not really what we want from children as well, right?
Yep.
The thing about letting children wait for a while, saving up for what they really want, is that because children always have that 5 minutes interest, like for this moment they like this particular thing, and after a while the interest will fade. So when they save up the money for it, then for sure that they really want that and they treasure it more because they took a longer time.
So that's the way to actually to get them to figure out whether they really want something, or it's just a whim, or maybe their friend has it and that's why they, and then they also want it, but actually they don't. I mean, it's going to be something that you buy and put there and nobody never touch again.
I think when things come too easy, then you also don't really treasure it.
That's the problem now, right? Because don't you find that we grew up in an era where we had to struggle through a lot of things. Our parents didn't have a lot. We didn't have a lot. So we see value in a lot of things that we have. But we've come to a stage where, life has progressed and we can provide a lot for our children. And because we can, and we're trying to make up for the fact that we didn't get that kind of lifestyle, and we give them a lot, that our children are getting used to a lot. I mean, for example, when I left my job in insurance, I mean, I was at regional level, earning good money, and I left, and I had this conversation with my children, and I told them, I said, things cannot be the same. Right? And I'm sure Eugene has a similar story when he left his job, right? And it was the same kind of conversation, right? So I said, things cannot be the same. We cannot, and I asked you where you want to go and eat. It cannot be this restaurant or that restaurant. And I think we got to pivot, and we got to change, and we got to understand that the money is not the same anymore. We can still have really good food if it's hawker center, if it's the coffee shop, and we're still okay. We're not going to starve, but you need to change from the fact that we cannot spend that way anymore. And you need to learn that spend a bit more wisely, right? So you can always ask for things. You need to be thoughtful when we spend money. And this whole process actually has been a learning process for my whole family, I feel. Because now we're very deliberate in how we spend money. My kids are also a bit more conscious of it. In that sense, it's been a blessing in disguise, right? So they've learned that money isn't easy, that you need to think about how you spend, right? And Eugene, you had the same experience, right?
Yeah. I think sometimes the best gift we can give our children is poverty. Yeah. If they
Poverty.
are poverty. Yeah. It's not a brand of a toy. Yeah.
It's a new
Of
sweet
course
brand.
not.
Yeah.
I hope
So,
it is.
so for example, my when I lost my job and was broke, the government sent me food coupons to my girls. They went to primary school and they every Sunday have to cut up coupon, put in a small box, take out one, put in their wallet. I think I mean they didn't feel much because they, they never really thought about where does money come from anyway. Yeah, but that taught them that they cannot just go for holiday anytime they want. They cannot. In fact, I sold my car, so they started taking MRT, bus, and they never complained. So I think growing up in the environment is healthy for them, so that they don't expect too much from their own marriage next time. From anything. Even if they earn a lot, they can still take MRT, take bus, still eat cai peng. And I think they can save a lot more.
Mm.
Yeah, cyber is good for dinner.
My favorite
Cai peng.
signature dish.
I eat that a lot during working times as well. Cai peng every day. It's good.
Yeah, and there's one more
Easy.
concept. Sorry about delayed gratification. So I just want to highlight that. As the kids progress, right? I mean, just now I thought about how a 3-4-year-old can go to McDonald's buy something. Yeah, and then maybe slightly older, 5-6 years old, 7 can go to Toys R Us and budget. Right, then they start noticing, there's something called price tag on each thing. It's not a sticker. Yeah, it's a price tag. Yeah, then as they grow older, maybe P2, P3, we start to give them allowance, right? So let's say it's every 3 days or every week. And the first thing we need to teach them once we give them allowance is to put it into 3 jars. Yeah. So 3 jars all start with the letter S for easy recall. Yeah, and if they can learn how to do this, then they know that for example, the 3S quite obvious. One is savings. Right. So for example, if I give them anyhow hantam a figure $10 per week, then they immediately put $2 into a jar, right? So they're only left with $8. So this act alone, which you do together with your child, right, of passing $10, of course, don't pass one $10 note for goodness sake.
Then they confuse, they tear.
There's a car. Got a $5.
$2, easy to divide. Yeah, then put $2 in the jar. The act of doing so is already delayed gratification, right? That means the child learns that this $2 I save first, so that next time I got birthday party to go to and all that, then I can say like, hey Joel, where's your savings jar? How much money is inside? Yeah, then he has to count and all that. Say, I have $20 inside. They say, okay, great. And how many friends do you have? Yeah, so start to do calculation. Then I only have $4 budget per friend to give . Yeah, then they say, hey, can I save $4 instead of save $2? Right, so they will start to take initiative. Then the second S is also very important, which we have not touched on yet. It's called sharing. That means they have to learn that money does not come from themselves. In fact, it doesn't even come from their father, which is me. I sincerely believe it comes from the Heavenly Father. Yeah, so children need to, if any of us watching this has faith in God, then we need to teach children since young that the money comes from God. Yeah, and therefore God wants us to share. Yeah, and then we put into this second jar called sharing jar. So first is saving, second is sharing. Then the third, I think quite obvious. Anyone knows?
Wow. Saving, sharing,
spending.
Yes. Yeah, so by the time you
Not only
spend,
to eat already.
only left $6. Yeah. So that's all I wanted to share. Yeah.
Okay, yeah. So actually, both of you have already told me. It's also something for me to learn. Cause ultimately, in the future, hopefully, this will be things that I need to, pass down, to the generations and things like that. For you guys, you have been through life a bit different than how I've been through. So definitely there are a lot of jewels that I need to take charge of and even know about. And yeah, all this, I think things have changed, like what Timothy has always mentioned as well. I think how life was in the past and how life was now how life is now is totally different, and yeah, we've got so many things to really look out for, and with the effects of inflation and things like that, these are legitimate things that are happening, and which got me thinking as well as you all were sharing, like in terms of for your children, you can teach them these financial management things, but I think ultimately as adults we need to know that we need to be the one that help them through it all, and as parents yourselves, I think May, you can kick this off. I just want to know, like, for your children, do you have set aside money for them? How do you do that, and for them to help them grow, and things like that? Yeah, do you do that for your children, for yourself?
Since I started financial advisory, then I'm planning to get for them very simple saving plans. Yeah, not a lot, but at least it starts. It starts somewhere. Yeah. So I already sold the idea to them over the weekend that, mommy is going to kickstart. Mommy is going to put in every month the minimum premium, and then yeah, then at least this
Yeah.
amount of money we put aside, and then it cannot be touched, and then you guys have your own bank accounts, and then for that you can actually use to spend on things that you wanted. Yeah.
I think a lot of the conversations with things to do with savings, I mean, traditionally has always been put your money in the bank, right? I mean, when I was younger, I mean, years ago, we had, POSB account, and they give you that POSB squirrel when you put the money in.
Yes,
So the
yes.
piggy bank, and then bring it to the counter, and they'll credit to your account. So I think we're brought up with the idea that you should be saving in the bank. And then a while back, I had this conversation with my friend. So my friend's really into investing, right? So he investing into the markets. He's a little bit of a risk taker, puts into fairly risky stocks, and different things. And in this conversation that I had with him, he mentioned that he also gets his children to invest.
Oh,
So his children are younger than mine. Actually, his son is 13. His daughter, I think, is about
wow.
10. And
Okay.
he's put it into them the philosophy that money can be invested to grow. Right? Obviously, they cannot open their own trading accounts because they're underage, so they park them with him. Right? So he opens an account for them, takes their money, so they allocate whatever money they want from their ang pao, and he puts it into the investment account, and they choose their stocks, right? And
They choose their stocks, or the
yeah, so I
father
mean,
has
they have a conversation, they choose it. So they have a
Ah,
conversation, and they choose the stocks that they want to put the money into, right? So I'm just wondering, is this something that you would consider? I mean, I'm not sure if you've done it with your kids. I definitely haven't done it with my kids. But is this something that you think you would consider doing with your children?
I confess that although I was working in Singapore Stock Exchange for 7 years and also investment banking for 6 years, that I only educated my son quite late in life. We traveled to US 2019 in June, and I mean I never had so much time with him in my life, because I'm not a full-time homemaker. Yeah, but for the 2 weeks there, it was just two of us in Miami, in Seattle, and all that. And I was trying to find meaningful topics, right? Rather than everything Disneyland. Yeah, so I started telling him things like, you see this Nike store, you know that whenever we buy a pair of shoes, because he loves Nike, right? Or Under Armour, every time we buy a pair of shoes, we are giving them money. Do you know under what circumstances you can get money from Nike? So when you ask such questions, they get very intrigued. They're like, huh? Okay, Nike passes money. Then I explained to him, there's something called shareholder, like even the shareholder is even bigger than the CEO. The CEO has to be accountable. Then he finds it very intriguing, like, wow, then I should be a shareholder of Nike. So that every time the more of my friends buy the shoe, the more stock price I get. Also that's one simple example. And we can see it everywhere. Everything they use from Google, right? Google is listed also. I mean, called Alphabet. Yeah, and then from cars that maybe we bought, then everything is listed almost. Yeah, so they can start to see like, oh wow, I didn't know. All around us, there are companies making money, and we can actually get a share of it.
It's quite interesting because I don't think a lot of I mean, to be fair, a lot of adults don't understand that either. Even
Yeah.
children, but it was not something that, I mean, when I had this conversation with him, it was not something that I thought you would have with a child, but he has done it. And they seem to understand that this is how it works. And I thought it was a really good idea, right? To get your children to, I mean, they're not gonna put in a lot of money, right? It's probably $100, $200. They can see their money grow. Worst case, they lose all their money, if they decide to put everything in Bitcoin, and the next thing you know, Bitcoin tanks again. But at least they learn from the process that this is the way the world works, right? You can make money, you can lose money, but the mechanism behind it, in terms of investing, is something that I think they should understand. At least whether they do it a lot or not, it's their choice. But I think they can understand it and they can do something about it. Right? So I thought it was a very interesting conversation. May, would you get your children to do something like that as well?
I have a different thought to the whole thing. I mean, yes, it is good to actually start them early to know about the different financial instruments that are available. But if kids grow up knowing that, hey, you can get 5%, 7% returns, then if something is of a lower returns, then to them it would not be something that they would even consider, because they're so used to that high life, that thrill of getting such a because when you actually do investments, right, even if you do dollar cost averaging or whatever, but you still get highs, right, when the stock prices go up, and then you actually get suddenly a sum of money, and then you have to reinvest again. So I rather them start from young, like what Eugene suggested, with the 3 jabs, and then we go from there. That means to walk first before you start running now.
But that's stage 2. I mean, saving is one thing. We teach our children to save, right? And to allocate money. But that savings can also be used, right? So it's not saved and put in the bank. It could be saved to invest, possibly. Right? So I just thought it was quite interesting, and just understanding. I mean, there are a lot of conversations you can have. One of the things, I mean, 5 to 7%, not always realistic, depending on how the market is. And you also can get minus 20% if the market tanks. And it's good for them to understand that there are different spectrums, and there's also a way to manage risk differently, right? So, I mean, when we talk to adults, we talk a lot about diversification. Diversification is the types of investments that you make into different low-risk instruments as well, like insurance savings plans, like you mentioned, or even fixed deposits and other lower-risk investments. So
in the same school of thought, we should also teach our children from young that there are such a thing as diversification. It's never too young, too early to start. So we can let them know that.
As long as they understand that conversation, I feel that it's good, right? They need to know. I mean, you're preparing them for the future. I feel, and that conversation is quite interesting in terms of, my daughter just asked me, about insurance, because she knows that I'm insurance, right? So she asked me to explain to her what insurance is.
Good.
Right.
She's
and I thought it was quite interesting. And another colleague shared a video, not a video, an audio file about her conversation with her children, about, asking them what insurance is, and asking them to explain back the concept of insurance and why people should buy insurance. And her children are much younger than mine, right? So I thought it was very interesting. So I'm going to ask you: have you ever had that conversation with your children to explain to them, what insurance? They've heard about insurance, but they have no idea how it works and why people should buy insurance. Right? So, being financial advisors, we're all financial advisors, right? Have we had that conversation with our children? And how have you had that conversation with your children to explain to them what insurance is and why it's important for somebody to buy insurance, or even why it's important to buy it at a younger age? Right. Eugene, maybe you've been financial advisor longer than me, so maybe you start off.
That's a very good reminder, actually. I must confess, I haven't talked to my children about insurance at all. I think I think we should. Yeah. And I mean, to talk about insurance, we have to talk about death and cancer and disabilities and all that. So I think one of the possible opportunities is when children and me, we go to funerals or go to hospital to visit. Unfortunately, due to COVID, hospitals and funerals are not really welcoming. Yeah, but last time, you had throngs of people, gathered around tables, eating peanut. I think those are very good opportunities to talk about death and like, like if they have young children, say, what do you think is going to happen to this family? The daddy already passed on, went to heaven. It sets them thinking at least like, oh, then that means mommy have to work. They say, oh, but what if daddy bought something called insurance? Yeah, then suddenly got $500,000. Then mommy doesn't have to work. Then they say, where got such thing? Why would people give us money? So it starts the ball rolling at least.
So that's a good way, I guess. I mean, situational, right? So you have something that happens, and people they understand the effect of having insurance and also the effect of not having it, right? So they can tell you that then mommy needs to go to work because the money's not coming from anywhere. So that's a good reality. May, what about yourself? Do you think it's good to have?
I also haven't had this conversation with them. Yeah, so yes, but going forward, I will try to find opportunity. I think when we actually make use of the situations around us, then the children can actually have something tangible to see and then to relate to. Yeah, very good idea.
Yeah, I think it's a good conversation to have because I think growing up we've had a lot of negative connotations attached to insurance.
Yeah.
Right. And people growing up and people who are a little bit older always find them have a negative idea when it comes to insurance. They're taking my money, giving me anything back. But I've always felt that it's a tool, right? And it's a tool to protect you. It's a tool to grow your money, depending on what you use. And it's really noble, actually, in terms of what we're doing in helping people to protect themselves, right? A lot of times you only see the effect of insurance when there's a claim, right? And unfortunately, with life insurance plans, the person who buys it will never see the effect of life insurance, but their family will, right? And you will see it if it's medical insurance, right? So I've had an uncle who, before he passed on, was telling me, hey, I'm glad I had medical insurance because towards the end of his life, he was in and out of hospital, and he kept telling me, hey, thanks for your advice because I bought it, he asked me whether he could claim something. I said, just go ahead and claim. And he claimed everything. I said, just take all your bills, put it, your pre, your post, whatever, just put it in and you claim. And then he came back and happily told me that, insurance company pay everything. Right? And he saw that the effect of having that insurance in gave him peace of mind because it took care of everything that he had to pay. Right? Unfortunately, a lot of people don't see that. Right? So having that conversation on insurance really makes sense in terms of getting your children to understand how it works and how it's there to protect people and to help people rather than to cheat people's money, put it in and you never get anything back, no cash value. I mean, it's not there for the cash value unless it's a savings plan.
I think the reason why people don't really see it is because a lot of them are corporate staff, so they get employees benefits from the company, so they feel that they can perhaps save on that amount of premiums, but they didn't have the concept of they're not aware whether the company policy is portable or not. So when they change companies, would their existing conditions be acceptable with the new company's plan, or if they find themselves to suddenly come out and become entrepreneurs themselves, then when they start buying insurance, then it'll be slightly more expensive given that they're older. Yeah.
Or it may be too late in some cases. I mean, I've had friends who are like that too. It's too late. So do you think it's a smart move to buy insurance? And I'm going to talk specifically not so much about savings now, but in terms of protection, right? In terms of a whole life, in terms of a critical illness cover, do you think it's important to have that cover for your children? And have you done it, right? So have you bought something to protect your children?
When I was young, not young but new father, I didn't think of buying life insurance for my kids. You know, the first thing you buy, of course, is the hospitalization. That one is must buy. Yeah. Then the next thing, maybe after a few weeks, you will think of endowment, education endowment. Yeah. And then you keep thinking like life insurance. Wait until they grow up to buy on their own. Yeah. Because the definition of life insurance is to replace the income, right? And since children don't have income, then why are we trying to replace? I mean, there's nothing to replace. Yeah. Only about 4 years ago, our dear financial mentor, Willie Tan, he reminded me that it is not for replacement income for kids. It is to protect, to ensure they get 100% insurability. Yeah, because the health condition can change anytime, right? Even something as minor as like sleep apnea, you know, sleep halfway, stop breathing. A lot of people don't even know they have sleep apnea. They just wake up very, very tired. Yeah, and such things can be either rejected by insurance companies or there's a loading. That means you get insured the same as everybody else, but you have to pay double of what everybody pays. Yeah, so such things are a wake up call to me, and I decided, okay, I think I should invest in their insurance. A lot of people think of insurance as spending, right? It is like buying car, buying bubble tea, buying whatever. So they feel very painful, like must I really spend another $300-400 for all these 3 kids? You know, this money can be better used for retirement plan or used to just buy more bubble tea. Yeah, but I suddenly feel that it is, you know, in Chinese we say 对不起啊，对不起孩子. You know, we are really not doing a service for our children. So it's very important for us to have a concept that if we don't grow the tree now, then next time our future generation, they won't have a full-grown tree with shades to hide from the sun. Right? In Chinese, 前人种树，后人乘凉. I'm not trying to boast about my Chinese here, yeah, but I cannot think of English equivalent. You know, all these are very, very Chinese concept where the parents give the children a financial advantage in their life. And our parents, I'm sure they wanted to do that, but just that they didn't have knowledge of how insurance works. Yeah, but now that we have the knowledge, why are we keeping it from our children? Yeah, moreover, it's only $100 per month. I'm sure anybody, even like people with very, very low salary, let's say 1,800, also can afford $100 per month. Right? It's impossible not to afford $100 per month.
Well, it's prioritization. I think you need to prioritize certain things that you want to. It's the same thing, right? So we were talking about budgeting for children. It's more or less the same thing. And I have a story actually for people who always tell me they can wait until they are older to buy insurance. I actually had a friend who was diagnosed with kidney failure at 16. Right? So you want to wait, you never know. I mean, one day he went in, got tested, and realized that both his kidneys have failed. You know, and kidney failure is one of those things that you can forget about getting coverage after that. Right? And at 16, you will never imagine that you would get something like that. And so people who tell me that, you know, I can wait, you know, I said you can wait, but there's no guarantee tomorrow your health will stay the same.
Yep.
You know, everybody doesn't think they're going to get sick, and unfortunately, it does happen to people. Right? And I've lived through that. This was a childhood friend. Right? I grew up with him since we were 10 years old. 16, he got kidney failure. He actually passed away at 40.
Oh.
Right? I always remember because I was overseas and I got a call and I flew back straight away. And when I saw him, he was in a coma. Never came out of the coma. Right? So it's real, right? It's happened. I've lived through it, and that's why I feel, you know, when people tell me, you know, I can wait till later. You can, but there's always a risk that you take, right? And you never know when your health is going to change, and that you will never be insurable again, right? So I always feel children, you know, yes, they may not have any income to protect, but you want to lock in and make sure that your children are well protected, right? So buy it early, get them covered early. You know, you can even nowadays we have a lot of limited pay plans. You can pay for 20 years and then the plans are fully paid. You don't have to worry anything about. And so there are a lot of things that you can do for your children to make sure they're protected.
Yep. Yeah, we have one comment from Yuan Tai. So I guess we will answer that first. I mean, we are left with a few more minutes left, but let's try to answer this and we'll move on as well. So Yuan Tai is asking, is there anything that you guys would have done differently in terms of planning for your children's future? So probably like, thus far, when you look on hindsight, what changes would you have made for yourself? Maybe May, you want to start first before we move to Eugene on this?
Okay, for me, I certainly would start buying a plan for them earlier lah. Yeah, I guess I belong because when we first started, right, having a small family, then of course budget is also a bit tight, so we wouldn't think of insurance, that would be the last thing. We will think of the immediate gratification, like food on the table, utility bills and stuff like that. But it is a necessity, yeah, on hindsight. And I felt that we should have like put aside that amount, small or big, it doesn't matter, but at least we get it started. I think at that time, we didn't know about surrender value. We didn't know that, if we buy a life plan, actually the life plan itself can also compound in terms of cash value. So if end of the day, all's well, the children are healthy, they can also still surrender the plan at a later stage and get back the money. We just had that error that wrongful mindset to think that once we dump in the money, then we won't see it until something bad happens to the children.
Yeah, that's true. I mean, different. Yeah.
Sorry, for me, I'll teach them entrepreneurship. Yeah. Actually, it's a bit unfair because I used to, I used to go and buy plain paper, pencil, and I drew comic book heroes and I sold them in class. Yeah. Each piece for 50 cents. Yeah. So there's a margin, you see, because you spend no more than 12 cents, let's say, then you earn 50 cents. So 50 cents minus 12 cents. And I think talking about investment, sometimes we keep thinking about stock investment shares. Yeah, but this is also investment. That means the children go and buy little things from Popular, put together, by putting together their value adding. Yeah. And then they can sell on carousel or sell in a pop-up store, or if they don't want to keep the money, they can always raise funds for a charity of their choice. Yeah, then they can feel that, I can actually make money even though I'm only 11 years old, 12 years old. Yeah.
Actually, that's very powerful. Yeah, I mean, okay, for myself, I mean, when I look into different kids out there, I think Timothy got mentioned before. So like, your own son, right, start to look into YouTube and things like that, and then they figure out, wow, so many things. Like kids these days are, they have so much knowledge or so much technology there for them to themselves to go and look up on things to, really start their own entrepreneurship journey. I mean, people are just streaming videos nowadays, and everyone is just watching, and they are themselves being donated money, and they don't really do that much, and that's quite cool. I think it's about opening your children to see more of such things, and I think in that sense, it's guiding them. I think what they see is one thing, but you guiding them to start this entrepreneurship journey is definitely a very powerful thing. Yeah, for sure. Yeah. And just to roll back a bit, right? I think earlier when we were talking about insurance, I think you guys would want to talk about some changes that are happening, which is happening in 1st July. And what are these changes about, and why should we care about these changes? Maybe Eugene, you want to explain a bit more about that?
First of all, I was discussing kids insurance with a lot of friends, and then they all like to wait and see lah. Yeah, some may wait until their children are 25. Yeah, so suddenly I received this announcement from the Life Insurance Association that they are going to change the projected returns. Yeah, So a lot of people say, projected man, what's the big deal? Projected is just not real one. Yeah, but unfortunately, due to the projected return changes, which is effective 1st July, so a lot of insurance companies, including Prudential, will be revising, specifically increasing the insurer's premium, to make up for the loss of the par fund returns. Yeah, so I've been going around sharing with my friends to quickly settle their kids' life insurance before 1st July. But allow at least one to 1.5 weeks to there's something called medical underwriting. That means not just after you sign and pay means you can get insured. Other people may reject you or find that it's too risky to insure you. Yeah, so please allow time. Yeah, and the I think I answered all the questions. Yeah. Okay. Yeah. Time and the reason and also the implication. Yeah.
Yeah, I think basically the 1st July changes is quite critical, and definitely everyone should reach out to your own financial advisors or even to us if you guys have any questions about this, because essentially we definitely don't want to move towards the future paying more when we can actually save on it as well. And I think essentially for your kids especially, I think it's definitely I mean, like what Eugene said, I mean, $100 per month for I think 9 years old, is that it for Eugene? 9 years old, $100 a month for 20 years. It's not a huge amount of money, and the kid, when they grow all the way, they will manage to get back the cash value for sure, and even more. And this is definitely something we should look into lah.
I calculated they will get back double or to triple if they are aged between 2 to 10. Yeah, but if as long as you're young, below 20, you definitely will get back at least what you put in if you're healthy. So that is a complete no-brainer. Like what May said, a lot of people forgot about this thing called surrender value. They only think of the money keep going out. What if I'm healthy, then I don't get money back? Then that means they bought the wrong insurance.
So essentially everyone do take note of this changes with respect to 1st July, and it's really because of the changes that the LIA decided, which is the Life Insurance Association, and they will definitely ask all insurers to change the percentages on the illustrated percentages on your policies lah. And essentially the reason is because bond yields has become very low throughout the ages, really because of COVID and things like that. So most of these par funds, which is what Eugene mentioned, the participating funds that insurers are in, most of them are quite heavily set aside towards bonds. So the lower the bonds are, definitely the premiums will start to go up, because we want to ensure that the insurance company wants to ensure that the premiums, your guaranteed returns are set aside appropriately for you. Okay, and whatever I say actually is quite important for the quiz later on. So I think Timothy, do you have any last questions that you want to ask Eugene and May as well before we go on to the quiz and see if anybody wants to?
Let's do the quiz first, and then we'll end up with a little bit of a shout out.
Okay. Yes. Okay. Now let me go to
the quiz.
Yeah. Okay. Let me press this. Okay. Let's see.
Okay. First question. If you are there, get ready. So what date will the reduction in the illustrative rate for the participating funds be effective? Right, so the first person to key it into the comments will win a $10 Grab voucher. Anybody there that knows the answer?
I can take part now.
Wow.
I would love to
nobody,
voucher.
then we see how.
Yay!
Okay.
We have one.
Okay. We have one. Okay, Nicholas put 1st July.
Yes, that's right.
Congratulations, Nicholas.
The changes will start 1st of July, 2021.
Yeah.
Right, so it's another 2 weeks time which means that in the next 2 weeks, if you are looking to buy more protection for your children or for yourself, please get that done.
Yep. Okay, next question. This. Okay. What has caused the changes to take place? Okay, what's the reason behind why this change has to happen? Anybody? Okay, Nicholas win one time already. Very good. Now we see anybody else. What caused the changes to take place? Give you all a hint. It has something to do with the bonds. What happened? What happened to bonds around? Guys, this is easy $10 actually. If nobody take the $10, then we'll probably take for ourselves.
Yeah.
Then we'll have bubble tea for ourselves then.
Yeah. Okay,
Okay,
anybody you want to answer this?
5 seconds, and then we'll move on to the last question. 1, 2, 3, 4, 5. Okay, let's move on to the last question then.
Okay, bond higher charges. Nicholas say higher charges. Okay, the changes is because, okay, I'm going to put the answer first, okay? Okay, let me put the answer for the people to see. And it's because of the bond yield decreasing, okay? That's why the changes have to take place, okay? To give a more realistic understanding about what it is, in current COVID season. Okay, last question. If you guys are still here, I see 6 people. You guys, so definitely some of you can definitely answer this question, okay? What does this potentially mean for the policies that are participating, okay? What does it mean for these policies? Okay, we are talking about premiums here. What will happen to the premiums, Now you understand that bond yields have decreased, and then, when bond yields decrease, most of these participating policies are making use of bonds, okay? So bonds decrease, and if your participating policies have bonds inside, what happens to the premium in order to make sure that everything is, the same or better? Anyone? There are 4 people watching this. I can see that. So definitely some of you can answer this question. Or Nicholas, are you there? You want to answer?
Nicholas got all the vouchers today.
Yeah. One more. Okay, we give another 5 seconds. 5, 4, 3, 2, 1. Okay. Why always I count to the end, then you come in? Okay, yes, very good, Nicholas. It's higher charges. Is it? Must wait for me to call your name? No need lah, just answer lah. Don't need call lah. Ayo. Okay, very good. Yeah. So essentially, it's because of all these. Most of the premiums will be increasing. So definitely, I think at the end of it all, we want you guys to reach out to your financial advisors or even to us, right? If you really want to understand a bit more and start, really insuring yourself and even start looking into savings plan for yourself, please do that, okay? So that's all the quiz we have. And actually on here, if you like to, as Eugene and May and even Tim himself has also shared, and we're talking about, how to protect your children, right? Because this whole session in itself is about your children's financial future. If you really resonate with what Eugene and May and even Tim has mentioned about, how you should start insuring your kids, even as early as their age are, before they start work. Because for myself, when I started work, yes, I had to get my own life insurance, right? But when I realized that, when I have to pay my own life insurance and things like that, it's getting a bit more on the pricier side. So essentially, if you see the value in giving your children that kick start, it doesn't even have to be a lot, right? I mean, the sum assured that you want to give it set aside for your child can be $100,000, $200,000, and it's only $100 a month. And if this is something that resonates with you, then definitely you can scan this QR code, And also, I think we can also put the QR code in the comments. Tim, can you do that to get the comments the Google form into the comments? And if you guys can, you can scan this QR code if you're using your phone, so that you can immediately go to the Google form and you can fill out some information, some basic information. And at the end of it, we'll definitely get one of us to contact you. Okay. And before we end off this whole session, we really want to thank everyone for joining us, including Eugene, and May, for really taking the time off, sharing your expertise, in how you can help your children, really gain that edge, in financial literacy. And we want to thank people also in the comments. I see Yentai and Nick. There are so many other people in the eyeball I can see, but actually never say anything. So next time, please don't be shy. Please, really have an interactive section with us, and we will definitely, answer your questions as well. So before we end off,
let's give Eugene May a chance to shout out and see if let's say people want to connect with them, how do they get in touch with you?
Yeah. So Eugene, you want to start off with that?
Sure. Yeah. Just look for this website, eugeneseah.com. Yeah, eugeneseah.com. Yeah, in fact, if you visit this website, you can get a free book. It's called The Abundance Blueprint. Yeah, and next time when we meet for coffee, you can get me to autograph it.
Autograph it. Okay, yes. And then
for me, I think y'all can get in touch with me on LinkedIn. Just May Ng. Yes. Thank you.
May Ng. Okay. Does it have the personal risk manager as well?
I think so.
Right?
Yeah, it does.
Personal risk manager.
Let me. Yeah. Okay.
Okay. So connect with Eugene via his website, eugeneseah.com, and connect with May via LinkedIn. She's known as May Ng, your personal risk manager. Yes. Thank you so much, Eugene and May, for being here on this episode 2 of the Supercharged Dialogues, and to share with us all your insights about financial literacy and your financial journey that you've had with your children. And I hope that people that are listening in have picked up useful tips from our conversation that would help them to have that conversations with their children and kickstart the financial literacy journey for their children as well. So thank you so much, everyone, for listening in. Thank you, Eugene and May.
Thank you, Tim and Leon and Eugene.
John and myself, have a good night. And we'll see you for our next episode of the Supercharged Dialogues. See you.
Bye, everyone.